Yo, what's good, boys? True, welcome back to a trade recap. Today, double trade recap. One trade we took in the AM session on stream that was on ES. That shit was crazy. This is the trade that we took on stream today. We're gonna start with this trade. This netted me just about a band, a little over $200 on 5 accounts, so not bad. Very happy with the returns on this. And then we took an additional trade on NQ. This is off stream. Did not have time to get in the PM session. I want to hear it. Where are you? Where are you? Fuck off, bitch. I was busy. I was busy. I took the trade. I made my money. I gave y'all money this morning. The fucking long this morning on ES or NQ, whichever you took, was better than the short anyways. Okay? So let's get into it. Alright, bitches. Hold on, let me. I gotta piss too, so this is gonna be a fucking short trade recap. So we gapped over our daily high, right here. This is our previous daily high right here. So my bias is set bullish. Go learn about daily bias. Bias is set bullish, looking for a bearish or bullish confluence. We have this bearish order block right here, and it's first for value gaps. We have a previously accessed session level liquidity right here. So I wasn't expecting a whole lot on that shit. Off the boot up, bro. Off the motherfucker boot up. We're reacting to the 5 minute first fair value gap, the 1 and 2 minute first fair value gap. We sell off down to our PDH. I'm assuming we swept out that level of liquidity. As you can see by this order block here, this sweep of liquidity caused a break of structure and inefficiencies on all of our time frames that we need, the 1, 2, 3, and 5 minute time frame. I got a speculative buy order on the 3 minute, 5 minute pointer. You can see right here. There's your 3 minute pointer, and then on the 5 minute, I believe it's in there as well. Where's the 4 minute? What the fuck was it? Yeah. So here's a 4 minute pointer. We had a 3 minute pointer. We had everything we needed, right? Stops under the order block, and then if we didn't create a fair value gap, then obviously we would want to get out of that position as soon as possible. So I got my entry, filled my entry. Basically, off the rip, I was making sure that we could easily break past this high. Not to mention creating a proper inverse of this bearish fair value gap right here, meaning the 1 and the 2, which it is a 1 and 2 for first fair value gap to the downside. I don't want it to be mitigated. I want it to be inverse, so we leave behind 1 and 2 bullish fair value gaps, and we did do that. And then once we did that, really just want to make sure that this session level density, these converging highs and lows don't have any, or I guess highs in this case, didn't have anything there. Nothing there to worry about. Next area of interest are these equal highs right here. This is one take profit point that I had right here. That was my first take profit point. That was the biggest one on stream. That's where I trimmed most of my contracts off on stream. I didn't take a very heavy position. I'm actually doing a lot of de-risking since I want to preserve my accounts for as long as possible and then take bigger payouts. So I usually can take the payout at the end of the month versus having to take them out bi-weekly. But yeah, pretty simple entry. It was just a pointer break of structure with 1, 2, 3, 5 minute breaks of structure, 3, 4, 5 pointer breaks of structure. Or excuse me, 1, 2, 3, 5 FEG, 2 or 3, 4, 5 pointer breaks of structure. Assuming that this liquidity had nothing here, we could properly inverse this and that this high had nothing left. And then once we got past this level, I saw this initial push. Granted, there was news. Didn't fucking know that. There was news. It didn't hurt me at all. We pushed through that level of liquidity. And then obviously you can set your data high, data low in there if you want to have that as an additional area for pulling your stop loss. I did not do that because I didn't know it was fucking news until I was in the trade. If I had known, I would not have taken this trade, to be honest with you. But it's whatever. It's no big fucking deal. Now, how did I know not to sell on this external source of liquidity right here? These equal highs. Well, the biggest reason is that did we create and sustain first fair value gaps that translated up the time frame? No, we swept it out, but we did not create and sustain those fair value gaps up the time frame. We had it on the 1 for a little bit and on the 2 for a little bit, but it did not translate up. My last take profit point were these two session highs, session level liquidity here, session level liquidity here. I trimmed in here mainly because it was a decent risk to reward. It's not worth trying to take it up any higher. It did go higher, but I'm not trying to sit in this trade forever. If I'm back testing, I might hold it for longer, but this is just the reality of trading. You're not always going to hold it down for as long as you want. Not to mention, I much preferred the short. So at the end of the day, I still caught like over, I don't even know. Let me see how many points I caught in total. 29 or about 30 points here. We'll check the short on it in a minute. I think it was close to 70. Which goes to show you that like, as long as you make up for your, as long as you're winning trades at a higher rate, not higher rate, as long as you're scraping by with wins and you have good risk management, you're fine. You know what I'm saying? I was trying to fumble around with some shorts up here, and then I was eventually able to get a short on NQ. I liked NQ's look a little bit more. I accidentally almost filled 3 ES on that move to the upside. Thank God I didn't. But here is the trade that we took after the fact. This was after the last trade, after that long. The long exits were about here, and then it continued to expand higher. In this case, we're reacting to session level liquidity. We swept out the session level liquidity created by these two highs right here. This is our session level density here and a fair value gap. Nothing important is on this fair value gap. Instead, we buy side sweep session level liquidity, remaining liquidity still there, and then we see the translation into a 2 minute, 3 minute first fair value gap. There's your 2 minute, or was it a 1 minute? 1 minute, 2 minute first fair value gap. 3 minute formed after the pointer, or I guess really during the pointer. If you take a look, it was kind of formed during that pointer. It was a little bit more rocky here, and I can kind of explain why. We were really, really close to EQ anyways. We did tap EQ, but we were really, really close in equilibrium. So I wasn't necessarily too excited about that position. And obviously, one thing to know about EQ is as you pull into EQ, you're going to disrespect a lot of pointers. You're going to form a lot of pointers. So you can't really get out on anything but a fair value gap, which can oftentimes screw up your risk management. For me, all I did was take this pointer break of structure, this guy right here, this pointer break of structure as a reaction to our first fair value gaps, as a reaction to our buy side sweep on our session level density. The problem is, if you respect closures and you held to end of day, usually I like to get out before the end of day volume comes in, because it's usually about 10 minutes before. You'll see that end of day volume come in. In this case, it was exactly 10 minutes before the New York session closes. What we saw almost immediately was a massive price hike to the upside. We're probably close to equilibrium. Oh my God, we're probably really close to equilibrium, and we're consolidating on this daily low. There is a structural equilibrium basically on this not daily low, on this daily high area, right? There is a structural equilibrium in here if you draw out from low to high. So there is EQ in here. You could have taken it to this EQ if you wanted to, but I reckon that we're probably just consolidating around near the daily high. In this case, we get in after the validation of our fair value gaps. I want to see fair value gaps form right outside this pointer break. And you'll see we did consistently create fair value gaps. That's all I care about. As long as we respect the pointer and are making inefficient moves to the downside, that's all I really care about. No fair value gaps are being maintained, but we are inefficiently breaking, right? You can see if I go here to the end of the trade, you'll see we have 5 minute fair value gaps forming outside of the pointer, directly outside of the pointer. We had all of our fair value gaps up here. Here's that 5 minute fair value gaps. We had everything we needed. We had a 3 and 5 minute pointer break as a reaction to those first fair value gaps, but there was no inefficiencies being made and maintained to the downside. But we are inefficiently breaking here, inefficiently breaking here, inefficiently breaking here, inefficiently breaking here. So it's all fine, right? As long as the pointer inefficiently breaks, it's all good. As you pull to EQ, you would probably expect that not consolidation, but you would probably expect that inefficiency to probably die down anyways. But the rule was maintained. We did translate into a 5 minute fair value gap here, so obviously holding that order down. We had an additional buy side sweep here with a pointer break of structures. So the rule that I set for myself is you want to see a fair value gap form off of this, and we did not. It ticked down to EQ. I was out on EQ. There was nothing going on for me. No point in trying to trade this. We're just breaking all these pointers, right? So we had also had these equal lows here, which were very strong. So I took profit on these equal lows. Strong source of liquidity. Remember, external through internal, targeting external. So there's external there. External through internal, targeting external, and then EQ for our last trim in there. And that also netted me a Raki, not on every account, just on one. I did not take this on multiple accounts. I just did a little bit higher size than this one and just took it on the account with the most amount of profit. So this is a pretty good trading day. At the end of the day, I netted just over 70 points, so I'm very happy with that. Now, if I just held the long down, right, if I held down the long the entire day, we can kind of get a good idea of what I would have caught if I had just been a little bit more patient, not patient, but maybe a little bit more patient, but also just everything else. At most, probably, I wouldn't have held it up to that order block, but probably like 50 points. So I did make back for the rest of the long I didn't catch, which I'm happy about, right? I'm very happy with both of these trades. They're very good pointer break of structures. Biases were clean. Just being able to read price action and not let the current profit affect your model is super important skill. I see a lot of people, in the eval stage especially, try to run through that eval very quickly. And, imagine, for instance, you were in an eval and you have $1,000 left in the eval, and right here it's like $990, and then you're not going to take profit because it doesn't pass your eval, right? You want to screw up consistency. that could be an issue. So you just want to trade right. Prop firms exist to take advantage of you, of course, but you want to do your best to just trade right for as long as you can. Obviously, there are going to be anomalies where some trades won't align with consistency, or some trades won't do this, or some trades won't do that. Just keep trading successfully. Stop worrying too much about how that is going to affect you passing the account. As a byproduct of stressing less on that, you will perform better in trading, and then therefore just pass the accounts naturally, right? So hopefully you learn a lot in this trade recap. Very simple: bias moves, sweeps, pointers, breaks of structure, fair value gaps, down to EQ. Very clean bias moves. Very happy with today's results. We are going to be live tomorrow on kick.com. You can check me out, link in the bio. I will leave the VOD for today's AM stream in case you want to see the live execution of that. As well as we have a Discord. Everything I do is free. And then finally, Memorial Day sale with Apex. All the money I make from this deal goes directly back to you guys. It's actually 90% off right now. Code TROOP. You can click the link in my bio for 90% off all Apex accounts. This goes until tomorrow. It expires tomorrow at 11:59. And then the money I make from that goes to buying you guys accounts. So get yourself funded accounts with them. They're cheaper of activation fees, cheaper monthlies. And then obviously tomorrows the community. So, all right, boys, if you have any questions, leave a comment. Let me know. If you have anything you want to ask me, I'm happy to help you. I will see y'all tomorrow morning. Deuces, boys. Love y'all.